Hello, fellow investors, and welcome back to Borex Investing. If you're new here, I cover the latest news and insights on the high conviction tech stocks I personally invest in. So, especially in the AI space, we're talking about names like Palantir, Nebius, Nvidia, Tesla, and a few others. I post at least one video every week, so follow along if these are stocks in your portfolio too. All right, so it's been a busy week in the markets. We had a rate cut. We had some new developments around NVIDIA chips, some fresh updates from Palantir, and some very interesting Nebius news that likely flew under the radar. So that is what I plan on covering in today's video. So let's get to it. So starting off with the large macro news, we did get that 25 basis point rate cut. There was a slight bump in the markets because of this right after the announcement, but it didn't really have this Santa effect rally just yet. I thought it was important to note that Jay Powell did say that inflation is coming in lower and tariffs may not be running the economy hot. So that indicates that he is turning dovish as his candidacy comes to an end. He did mention AI spending, specifically on data centers, was holding up business investment, and that he and the Fed expect this growth in spending to continue into 2026. So that's definitely bullish news for the AI names. Speaking of AI names, let's kick things off with some NVIDIA news. Because as we know, everything NVIDIA related has big implications on the entire AI sector. So, first off, the Financial Times reported that Beijing is planning to restrict access to NVIDIA's advanced H200 chips, even though President Trump this week approved exports of this technology to China. So, on one side, we had the US loosen restrictions, but then on the other side, we have China itself saying that they might tighten them. And it gets more interesting. We learned from the information that DeepSeek is already planning to train its next model using NVIDIA's Blackwell chips. So that really tells us two things. One, NVIDIA chips and Blackwell is in extremely high demand worldwide. And two, China's top AI players still heavily rely on NVIDIA hardware. But the most significant part of the story was that we got some reports that Blackwell chips are being smuggled into China despite export controls. So, if that's happening, it really shows you how intense this race is with companies trying to get NVIDIA chips by any means necessary. It's really evidence of overwhelming demand. And I guess the whole Google TPU thing isn't really a big deal anymore. Companies still want the NVIDIA chips, which are known as being the best in class. And remember, whenever there's overwhelming demand at the model training layer, that's bullish not just for NVIDIA, but for the entire AI infrastructure ecosystem, including names like Nebius. All right, moving on to Palantir. We learned this week that the US Navy has announced a 450 million strategic investment in the shipbuilding operating system, ShipOS. They're doing this to accelerate the adoption of AI and autonomy technologies across their industrial base. So this will translate to roughly 450 million in revenue potential for Palantir over the next 2 years. So one of the common criticisms of Palantir is that the company carries a premium valuation and a high price to sales ratio, but deals like this directly address that concern. When you consistently land half-billion-dollar contracts, growing into that valuation becomes far more realistic. So, this latest deal is exactly the type of high margin work that strengthens Palantir's moat and reinforces the bull case, in my opinion. Also, everybody's favorite Palantir YouTuber, Amit, posted an excellent series of interviews from Palantir's Paragon event showcasing how Palantir and their partners are using Palantir's ontology to deliver real production AI outcomes. He met with the NVIDIA representatives that were at the conference, as well as some of their partners who are implementing Palantir software at different clients. So, the common theme from these interviews is that Palantir is the OS of the future. So, just some examples of the use cases. We learned that together with NVIDIA, Palantir is powering real supply chain optimization at Lowe's across 1,700 stores. We learned that they helped hospitals cut 48-hour fatalities by 68%. They also enabled insurers to process claims in minutes, not days. And they're even supporting edge and battlefield decision making in defense scenarios. So, all that taken together, the event showcased Palantir as the AI backbone for companies in many different sectors. So, I really recommend checking out the interviews on Amit's channel if you're interested. It's not hard to be bullish on Palantir when you see how critical their software has become for decision making across government and enterprise customers. The value they deliver is real, and customer satisfaction keeps reinforcing that story. So I think it may take a few more years for Palantir to fully grow into their valuation, but the direction is clear. With continued adoption and expanding use cases, Palantir has a realistic path to becoming a $1 trillion company in no time. All right, last but not least, moving on to Nebius, my current highest conviction pick. We learned this week that Tom Lee from Fundstrat, one of the strongest bulls on Wall Street, has added Nebius to Fundstrat's small and mid cap ETF. What makes this notable is that Dan Imes and now Tom Lee, two analysts who have been consistently right about the tech trade over the last 3 years, are now openly bullish on Nebius. For me, that's very strong validation. When analysts with proven track records line up on the same name, it really reinforces the conviction behind the thesis. All right, we also got some more news about another potential data center site. So, Nebius acquired 398 acres in Independence, Missouri, with plans for a large AI data center campus that could scale to 8 to 10 buildings. This would represent billions in investment and deliver roughly 800 megawatts of reported capacity. So importantly, this would be Nebius's first fully owned and operated US data center, aligning perfectly with CEO Arcadi's recent comments about reducing reliance on co-location partners. So I think a realistic target for operations will be 2027 here. Now let's remember this is the third US site in progress alongside Alabama and Indiana, which I covered in past videos. I'm really looking forward to official updates from the company soon on these new locations. Now, despite all the positive company specific news for Nebius this week, it wasn't smooth sailing for the broader data center and NeoCloud sector. We had several external factors that put pressure on prices and really pulled Nebius down along with the group. So first, CoreWeave had a negative impact on the entire space. They announced a 2 billion convertible note offering due in 2031. So deals like this tend to spook investors in the short term, but really the reality is simple. AI infrastructure is incredibly capital intensive, and this is really simply the cost of scaling in the middle of an AI arms race. Still, whenever CoreWeave raises capital, the entire sector gets sold and Nebius gets dragged down with everyone else. So, we've seen this story before last month, so it's nothing new. And I don't think it really spooked anyone too much that has strong conviction in Nebius. We also saw pressure from Oracle's earnings reaction, which dragged the entire AI trade lower. So Oracle fell more than 11% after hours after announcing a $15 billion increase in capex for 2026, which investors suddenly treated as a debt concern. But in my opinion, that's a misread. Oracle is spending aggressively because AI demand is exploding, and they're really following the same cloud build out playbook that Microsoft and Amazon used years ago. So, analysts, including Bank of America, were clear that this is simply a timing mismatch between infrastructure spending today and revenue that shows up later. OCI revenue still grew 69% year over year, backed by a massive 523 billion AI backlog. So, in short, this was a sentiment driven overreaction, and it's not really a fundamental problem, in my opinion. Then we got another negative Oracle headline on Friday when Bloomberg reported that Oracle has pushed some OpenAI data center timelines from 2027 to 2028, citing labor and material constraints. That headline immediately put pressure on the entire data center space. Oracle then came out and denied the claim, but the damage was still done on the market. What stood out to me is how indiscriminate the selling was. So Nebius sold off alongside Oracle, even though this is clearly a Oracle specific problem. I mean, it's Oracle specific execution risk, and it's not a demand issue for AI infrastructure at all. But this is just how herd mentality and algo trading work in today's market. So think about it this way. If Pepsi had a health issue tied to one of its ingredients, algorithms would likely sell the entire beverage sector, including their competitors like Coca Cola. But in reality, if Coca Cola did not have that ingredient in their beverage, then it would actually benefit them by allowing them to gain market share by pulling more customers away from Pepsi into Coke. But really, the market rarely makes that distinction in the short term, and that's one of the problems with short term trading. So, really, the same thing is happening here if you think about it. Oracle's execution constraints are not Nebius's problem, and these type of sell offs simply create better entry opportunities for Nebius at lower prices. And closing off, also, we had one of the more ridiculous narratives of the week, and that was data centers in space. So Google announced Project Suncatcher, which is an early stage concept to explore solar powered AI data centers in orbit. So with test hardware targeted for 2027, some investors somehow interpreted this as bearish for neocloud providers like Nebius, which honestly makes no sense. Can't even build enough data centers on Earth to meet the current AI demand. I mean, and now we're suddenly talking about space. Power grids are strained, construction capacity is maxed out, and hyperscalers are really fighting over every available megawatt. So, this crazy idea that space based data centers will somehow compete with Nebius or any terrestrial provider this decade is really just pure fantasy. I mean, if anything, the fact that companies are even thinking about putting data centers in space just highlights how extreme and durable AI demand has become. So, selling Nebius now because Google might launch satellites one day is frankly absurd in my opinion. All right, but what does this mean? So, what we're seeing right now is sector wide sentiment pressure. It's not a breakdown in fundamentals at all. And even Jerome Powell, during his Fed meeting this week, confirmed that the spending on data centers is really helping the overall economic growth. Demand continues to outpace supply, and companies like Nebius remain firmly positioned in the middle of this build out. So short term volatility doesn't change that long term reality. So, it's been a very wild week, and I hope all you guys are hanging in there and not selling under pressure. All right, that's going to be it for today. If you found this useful, please like and subscribe, and let me know how you're doing with all this market volatility in the comments. I feel like we're all just ready for a Santa rally. So let's hope we get it sooner than later. Thank you.